Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 25th until the 29th of July. Now, as with last week, the highlights for this past week were of course the earnings reports from some of the world's largest corporations. Just to name a few, we had Apple, Microsoft, Google and Amazon. And on the Forex front, we of course had the FOMC meeting minutes, for which we'll dive into the details later. But first, a disclaimer. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So kicking things off with stocks, like we mentioned, we had yet another blockbuster kind of week with more than 3,000 stocks reporting their figures, some of which also happen to be the world's largest corporations, as we mentioned during the intro as well. Now, as we mentioned, we also had Microsoft, Google, Apple, and Amazon who reported their figures, but of course this does not cover the whole list. The point though is not to cover the whole list and every single stock. The point is to see what kind of impact this kind of reports can have on the stock prices themselves. And when we say earnings report, I don't just mean the headline figures. I don't just mean the EPS estimate and the revenue estimates. What I mean is obviously getting to read and understand the full statement release from the said company, because there could be occasions where the reports could be somewhat mixed. For example, we might get like a negative EPS estimate and a positive revenue figure. But at the end of the day, if they do cite some positive outlook with regards to the growth of the company in the future, that can also positively impact the stock price after the earnings release, and not just focusing on the figures themselves. Of course, the figures are in their own way important as well, but what I'm trying to say is not the only thing to take note of when a report is released. And for that, we're going to be looking at Amazon, which was a pretty good example for this one. Now, Amazon, like we said, it reported the figures over the course of last week. So you can see that the figure came out on the 27th and it was after the market close. This is another important thing to know that we keep mentioning each time we come around to the earnings releases, because obviously if the figures are released after the market close, then you expect to see the impact with the open on the very next day rather than on the day of the release itself. And what happened here is that Amazon had a mixed report. They actually missed the EPS estimate by more than 250%, which is quite a stark figure. But on the other hand, they did meet the revenue expectations. They actually even beat them, which was ever so slightly. It was only by 1.5%, but nevertheless, it was a mixed report, since obviously it just missed one of the estimates, but it actually beat the other one. And the reason they cited growth with regards to the revenues is because they basically said that sales were in line with Q3 expectations, as growth in their cloud business helped beat the revenue forecast for this month's quarter, which was also one of their most bullish yet. Now, looking at the chart itself and why I pulled it up as well, by the way, it's on the daily time frame. So you can see that even though it had the mixed report and it actually missed the EPS estimate by so much, on the very next day it actually surged by more than 10%. So we can see the close here was around, let's say, 122, just to round it up, and then we gapped up the next day $10 higher to 132, and it's actually closing the week in the mid 130s, which is now 135. So you can see that despite the mixed report, it was one of their best quarters yet in terms of revenues, which is obviously, looking at the price chart itself, it seems to be what traders are pretty much acting upon when they're making their trading decisions, and potentially one of the reasons why the stock price of Amazon surged by so much. And adding to the bullish sentiment even further, we even had several Wall Street firms such as Bank of America Securities, UBS and Oppenheimer raising their price targets on the stock, which could have definitely been a factor as to why we had such a strong surge, despite, again, the mixed report. And not to keep it just at Amazon, if we look at yet another stock, let's look at Apple on this occasion. Now, Apple was pretty much more of a straightforward report in the sense that Apple beat both the revenue and EPS estimates, and this saw the company surge by almost 4% on the very next day. We can see the report was on the 27th, after the market close again, and the impact was seen on the very next day again with the open, as we can see the gap up higher and closing even higher the week towards the 162s. But again, this was, like I said, somewhat more of a straightforward report comparing it to Amazon, because obviously they beat both of the estimates. And yeah, this is for us covering stocks for the look back. Next week, we're going to have an even greater amount of stocks reporting their numbers. If you thought 3,000 stocks was already enough, well, buckle up, because next we're going to get even more. And obviously, we're going to be covering this in the Outlook as well. So definitely stay tuned. Now, in the Forex front, as we said during the intro, we had the FOMC meeting minutes this past week. Looking at the economic calendar, the rates were hiked by another 75 basis points. In the meantime, let me just pull up the chart for the dollar index. Just switch it here. So yeah, the interest rates, they were hiked by another 75 basis points, and they're now sitting on 2.5%. As per an article, this was also the Fed's largest hike since November 1994. But with that being said, just like we have with the earnings report, so you have the actual release of the headline figures, but then you also have the statement release that follows suit, and the same thing applies with the FOMC meeting minutes, in the sense that we get the interest rate release, so the actual figure, and then you'll typically see that round about like half an hour or an hour later to the release, we also get the FOMC meeting minutes, which themselves is obviously where the Fed's chairman will come in and discuss with regards to the outlook of interest rates in the US and in general the overall economic outlook. And what happened with the meeting minutes is that the Fed's chairman, Jerome Powell, reiterated that he still thinks the US is not in a recession, citing strong employment data. But despite all of the comments, if we look at the dollar index, and if I set this onto the weekly time frame, we can pretty much see that it had a negative week, as it fell by more than 0.6% on the week. And some of the currency, like the more notable currency pairs, if we switch back onto tixee's platform, some of the most notable ones was the US dollar Canadian. So if I switch this onto the weekly chart, so you can see pretty much it's trading at the very lows of the week. It started the week at the 1.2915, and it's now pretty much 150 pips down on the week. And then if I switch on the US dollar Swiss franc, it would be more or less a similar story. So again, it's trading towards the very lows of the week. It started in the 0.96, and again, it's pretty much, I'd say, 110 pips down on the week as well. So these were the more notable ones. Again, next week we're also going to have the jobs report. So it's something that's obviously going to be bringing in further volatility in terms of the US dollar. So definitely stay tuned for that one as well, as to when the figure is going to be released. Now, oil prices, moving on to commodities. Oil prices rose on the week as investors see little prospect of supply levels rising in the next week's OPEC committee. So if I switch this onto the oil chart. So yeah, next week, aside from the NFP report, we're going to have the weekly meeting, not the weekly, but one of the meetings that OPEC pretty much conducts, where they discuss the supply levels in the market, and they also give an outlook as to the levels they expect to see, either the supply levels dropping or rising too. So yeah, seeing as how they don't see any prospects of supply levels rising, obviously this means less supply, potentially further demand. So we saw oil prices rising on the week. The figure was by 3.5%, or $3.38, which was also probably fueled by the drop in the dollar as well, since obviously, just like gold, oil is also pegged to the dollar. So they have, I wouldn't say it's the inverse correlation is as strong as with gold, but definitely that could also be playing a factor. And that leads me to the next point with gold, as we saw gold prices rise on the week as well, potentially as a result of US dollar prices dropping. Now prices for gold rose by 2.1% or $36 on the week. And we can even plot, if we want, we can even plot a channel to see where we can see prices are found in the moment. So if we plot the channel here, we just drag it all the way down here. I'll just bring the other side here. So you can pretty much see we're coming close to retesting the top ends of the channel itself, and it's somewhat coinciding with this structure level here. So it's definitely gonna be an interesting price level as and when gold prices reaches that region. If we do see it breaking above and then retesting with prices coming slowly, we could potentially see gold prices moving higher. However, if we see a strong rejection down from that level, then that could indicate potential further downside. And yeah, there you have it. As far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you in the next one. Until then, trade safe.